And I'm going to dive into something that I consider one of the most important aspects of a structured market behavior, which I consider to be root candles, these boxes here. Now, I'm going to talk about the framework, but when we talk about root candles, we aren't just looking at random candlesticks, right, that happen to stand out on a chart for no particular reason. Root candles are static, so they're predetermined time-based candles, meaning that every single day it's the same exact time. And because of that, they exist regardless of price action, regardless of trend, regardless of market conditions. They're always going to be there. And so they allow us to track when liquidity shifts, when momentum changes, and when key movements are initiated. So, for example, a breakdown of the root candle here, you can see a flush move below it. There's a lot of examples that we'll go through today. One of the biggest misconceptions in trading in general is that price action is pretty random, right? Or it's just based on emotions. It's not really the case. To a certain degree, not 100%, but to a certain degree, price is structured. And much of that structure revolves around liquidity in general, so sell side, buy side, and time, the timing of everything. Every move in the market is fueled by orders, right? So liquidity being taken at sell side, stops being triggered, positions being built or unwound. And all these movements, they don't just happen anywhere. They happen in particular areas. So that's what root candles are for. This is where essentially the root candles come in. These candles do not change. They are placed at predefined timestamps. Like I mentioned, they are static, meaning they're always going to be there. So your job is to recognize their significance, which I will go over today. So think of it as a tool under your tool belt. When I look at DTT, yes, I have AMRP, which is a really great tool to have. We can see the ranges based off data, but this gives me another tool under my tool belt to utilize. So we're going to go over the framework here, and I'll show you guys just how important and vital and useful they can be. So in general, why the root candles matter. The market, in my opinion, is just controlled by cycles. It's not really a theory, it's just how institutions operate. So they engage with the market at specific moments to move price efficiently. And it's not that they are out to get anyone, taking anyone's money or anything like that, or anyone's orders. It's just how the market works. They're just trying to make it more efficient and essentially maximize liquidity before a major price shift occurs. So that's why when you see, for example, this manipulation that took place today, they're just driving orders to the buy side before taking it back down and repricing it. So this is what we consider manipulation, but that's what I'm trying to get at. They're just maximizing the liquidity before the major price shift occurs, which is here. So why does that matter? Well, by tracking the root candles, these gray boxes that I have here, we aren't really predicting price. We're not supposed to be predicting price as traders. We're just reacting off what framework we have. So we're aligning with these structured liquidity events that repeat daily, weekly, and even monthly. So these root candles, like I mentioned, they're the same times every day. So because of that, we aren't predicting price. We're just reacting off of them. Does that make sense? Give me a one if that makes sense so far. Everything that I've said. If you guys are with me, and give me a one. So we're not as perfect. Yeah, we're not really predicting where the market's going to go with these root candles. It's just a way to have a tool under our tool belt and react off of them. So now that that is explained, we're essentially just reacting off the root candles. Now I want to talk about when price approaches a root candle, one of three things is likely to occur. That's what makes them so useful. Number one, it's going to be a continuation of a trend. So if there's a current trend going on, and let's go to perhaps a previous day, and you can see just how even overnight this happens quite often. When there's a trend going on to the buy side or sell side, we're going to look at a pretty clear trend day here. So this one was a pretty clear trend day, and we'll just go back in time a little bit. When there's a predefined trend, this is the first utilization of a root candle. sometimes we get stuck, looking for a specific PD array. If you're an ICT trader, you're using something else, right? You get stuck in what could my entry be? And I personally love using root candles because of this. This is utilization number one. When there is a trend, I simply look for a close above a root candle. For example, 953 here. And I like to see price hold that root candle. I wouldn't like to see it close back beneath it. If it does, then I'll simply wait for it to close back above it. This is one of the approaches I have with root candles and why they're so useful. If I don't really see any PD array that I like or etc., I'm simply just using root candles as a trend continuation. So we have a touch point there. Very quickly, it just moves away from that. This example here closes above and continues the trend. Same thing and same approach here. We have two root candles. We're simply looking for a trend continuation off of these. Once we get a break above, we're expecting the trend to continue. So forth and so forth. So that's approach number one. Are you guys following so far? Give me a 1 if you guys understood that approach there. And we're actually seeing it in a live environment right now. So as I mentioned earlier, I like to use them for trend continuations, and we're actually seeing this live here. So this is a PM session model for DTT, and it looks like we had a pretty vicious reversal from this area, right? Thereafter, from this specific time to this specific time, I like to see this root candle hold, which it does. We then start a new time model, price reprices back down, and we're seeing this live here, a continuation of the current root candle for the current model. Pretty simple framework, but you can capture some pretty easy scalps with this, and at the same time, pretty easy swings if you're a swing trader as well. Here's the weekly models. It's the same idea, same effect. We're looking for a continuation once we get a close above. You can get a pretty nice scalp with that. Same thing here. And essentially the next point I'm trying to make here with the root candle, as I mentioned, there's three approaches to it. Number one is a continuation of a trend. And number two, which I'll talk about now, is a reversal. It simply suggests that the liquidity has been exhausted and the market needs to rebalance. So when I look at a reversal from a root candle, this is actually a prime example today. So we've taken some buy side in the morning, and this subject today is definitely about root candles, but I would like to point out something really key. We have perhaps that gap everyone's looking at, including myself. We have that new week opening gap. But if we quickly look at AMRP, which we've discussed here in previous lives, we'll see how it overextended and came back down. So if we didn't have this on, it would look quite different, correct? But we can see how price very viciously came back down thereafter. So what happened on the lower time frame? It's that root candle I mentioned earlier. So number one, remember, it's trend continuations. And number two, it's reversal points. So if I were to zoom in here, as soon as 953 prints on the chart, I now have an established anchor on the chart to create three frameworks. Either I'm looking for a continuation, in which case I'll wait for a close above the root candle, and I'll look for a retracement back up and potentially long if I'm feeling confident enough that this is going to continue. On the other hand, this is the second approach. I'm looking for a reversal. So if this thing cannot close above, I will simply look to see can it break down below it. In which case I will often look for a move back up and I will enter short, writing it back down. Now the question may be, what do I target thereafter? Well, I can simply target sell side in this case, or if we have AMRP, I can also use that. So if we take a look at that, we'll see how that loads up. I can target this lower area and any extension beyond that, which we've discussed before. Any questions so far? Are we still following? Give me another one here. A lot of ones, perfect. So that's the second approach, correct? Now we've discussed two approaches, a continuation of a trend, and the second approach is a reversal. Now the last approach is what many may call time distortion. It could also just be a period of accumulation or distribution. This usually happens with root candles where price stabilizes before the next major move, in which case we'll use the next interval. So that's what the intervals are for. So let's go back in time, and I'll show you guys an example of that as well. We'll try to find some choppy price action. I think FOMC was a pretty clear example of that. So let's go back in time here to yesterday. And what you're about to see is stacked root candles. So when they're very close proximity to each other, all these candles here, it's just a lot of time distortion, and you likely won't get an expansion until a specific time. So I'd like to point this out. This is the third utilization, and probably very vital too to understand this because it's a period of accumulation and or distribution. So you can stay out of the market, you can try a couple scalps, but knowing how price gravitates towards these specific root candles here and just consolidates around them, you can choose to stay out until a specific time. So as we can see here, consolidation until 1235, which is the next interval, and then we proceed down into the sell side and breakdown of this root candle. So these behaviors are not random. They are essentially part of the mechanical way that the market operates, but at the same time, we're using this from DTT. Yes, the gray boxes, great question, are mapped out by the indicator, which draws everything automatically for you so you can save some time and you can simply just look for an entry that you observe and fit with your narrative, right? So great question there. It also plots AMRP and different subjects that we've talked about before. Now, the relationship between root candles and liquidity, so I want to quickly break this down and why it's crucial for understanding price movement. As we discussed earlier with the move to the buy side, liquidity is always collected before a really, really major move. So the market doesn't just move because it wants to, right? It moves because either liquidity is taken or it's being redistributed. And root candles, they're often the moments where these liquidity grabs take place, whether it's stop hunts, inefficiency fills, or just institutional orders being executed. And a prime example of that is actually today. So we can see the stops got taken out here, and very quickly, price redistributed all the way back down. At that same time, the root candle formed. So if you're ever looking at major liquidity pools, always keep your eyes peeled if there is a root candle in close proximity, because you can capture some pretty easy soups, trends, or reversals from that reversal point. And as I've discussed in the first book, which was about a year ago now, the market really just operates on time. It's not also price, Some volatility increases at specific times. It's just how it works. So a lot of people know that 9:30 is pretty volatile, correct? Give me a 1 if you guys agree with that. And there's more times besides that. So that's what DTT is. Yeah, super 1, right? It's pretty volatile during New York Open. The candles just immediately get larger after London session. So we can all agree on that. But that's what DTT is as well. So it has volatility injections and reversals at specific times. So for example, this is a prime example here. I mean, just it's pushing to the buy side. After 9:55, it distributes down. It continues the trend, and at 11:10, it just heads back up. It's distributing down here, and at 12:35, it begins to consolidate. So there's no randomness to it. It's very particular. And that's just how predefined time intervals work when it comes to DTT. So, like I mentioned, the root candles, they act as markers. So when these programs are more likely to engage. Meaning if you track these candles with the indicator here, it's pretty easy to understand order flow. You're just tracking any possible institutional activity. So if you're looking at breakdowns, continuations, reversals, if you just simply use these root candles as entry criterias, you don't really need anything else, but that's the way I utilize it. And now that we understand the framework of root candles, I pretty much summarized it very quickly within 18 minutes there. You can combine it, now that we understand it, you can combine it with AMRP. So that's what it's there for. When you understand both, AMRP is simply just a data-based reversal zone. These blue boxes now, the buy side, sell side. We had a little more volatility than average today, but when you understand what's going on with the root candles, you can then utilize AMRP in that degree. And for example, if I were to, let's say, look for a quick scalp in the current PM session, this is something that you could easily do, where I'm looking for a continuation of a trend now that we've closed above the root candle, and I can simply target AMRP, the average model range probability. That's all it is. Same thing over here. If we go back to this previous model, I could use AMRP as my entry, or I can wait for a close above the root candle. And if I understand price is pretty volatile, I can target the previous root candle, which is right here. Pretty easy scalp there. So there's all kinds of easy scalps you can do with DTT. That's the beauty of it. You just plot it on, and you don't really need to dig too deep, right? It's just understanding these main components and the structure of it. And after that, it's just a breeze. You can get some pretty easy scalps. Or if you're into swing trading at the same time, you can use the weekly models. So we can see AMRP being used there with the root candles. And let's look back a little bit in history here. And we'll see how it's been used throughout the week. Same idea. So if we were to zoom in there, if we remember correctly, this is our root candle. This is AMRP on both sides. A close above, I could target the previous root candle, which is over here. AMRP up here. A close below, in a breakdown, I can target the opposite side, which is the lower AMRP. So as I mentioned, there's 3 ways to use the root candles. And I hope that answered any questions or gave you guys more clarity. They are either used as continuation markers. If you're on a trend day, root candles are so easy to use if you're on a trend day. If you're just pushing up on the buy side or you're pushing down to the sell side, price will very often, we can actually look at a sell side move for a trend day. If we go back in time here, price will very often just be using the roots on the way back down. And you can look for very sharp entries within that. So this is a pretty clear trend day, and I wouldn't really have to say anything because it speaks for itself. We have a pretty similar 953 rejection. It's very similar to today, where price failed to push up, had a failure swing. Very quickly, 953 acted as a resistance area. And at 955, as we know, it's a reversal or injection time. And we proceed to the sell side. What if I fail to catch that move? Well, I simply wait for a rejection off the next root candle. Once we break below, I can simply capture the trend down to the sell side. And last but not least, I've spoken about this before, but with the root candles, we can also use them for discrepancies between the S&P and the NASDAQ in this case. Sometimes you'll see the leader in strength between the two. Sometimes the S&P will be stronger, the NASDAQ will be. So let's take a quick look here and see if we can spot any similarities with that. So this is the current NASDAQ contract, and let's look at the S&P. and we'll try to see if we can spot anything there, specifically with the root candles. So you can see, actually, I already spot one. If you guys remember, and I'll show you guys in a second, this is what I call a root SMT. I don't really focus on SMTs too much like that, because I just focus on simpler entry criterias, but I do like to observe on a different screen from time to time, and you guys can use this as well, observing which one is the leader and which one is the weaker pair, because as we can see here with the root candle, the S&P didn't really take out the buy side here, right? But it did push above the root candle. And if we go back to the NASDAQ, we'll see this is what I call a hidden root SMT. It didn't take out the buy side either, but I'm looking at the root candle instead. And then here we can see it failed to push above. Meanwhile, the S&P did. So while many people may disregard this, I will look to see, okay, the NASDAQ is the weaker one. I might short because of that. Give me one if you guys understand that concept. Let's see, we have a couple questions here. You have one suggestion for a root candle if possible. You've watched all the old videos. In one of the videos you told that you can extend the root candle of each session. Yeah, that's definitely something we can incorporate. I would love to do so. Perhaps an extension of root candles. Let's see, we have another question by Thorax. When market conditions change, like it's been pretty volatile recently, like this week, do I adjust the settings for at all for AMRP levels? Or how do you adjust your trading when conditions change? Definitely, I can answer that. So when conditions are more volatile, like today, it's pretty volatile as we can see. I like to keep it on 9, the model look back. This gives me more variability in terms of how far it looks back. And from there, I can gauge price a little bit better. So if there's more volatility than average, I will keep it at 9. Now, it still overextends, right? Sometimes the market is just really volatile. As I've discussed before, let's say we start to overextend here. I can simply just draw a standard deviation and extend this data-based metric. So because it's data-based, I'm just extending that out. And I'm looking to target -4, -4.5. Very often you'll see price consolidate either at -2 or -4. So if we look at some other examples down here, we could do the same thing here. Once we break below and then price is continuing down to the sell side, I can repeat the process because I know and understand it's pretty volatile conditions. As you can see here, it's almost catching it like a baseball. It's just -2 or -4 very often, and it snaps back and starts to consolidate. Same thing here. If price is pushing to the buy side, I will repeat the process and observe -4 and -4.5. It's pretty cool, right? So it catches it like a baseball almost. Any questions on that? Now let's say if the conditions are not too volatile, price is in a consolidation, well then I will likely decrease my look back. This gives me lower targets and smaller targets to deal with when I have a look back of 3. So if we go back to a choppy day, for example, let's just use this as a reference, FOMC. I currently have a look back of 3. That's because conditions were not too volatile during this time period. So you can see it hasn't really moved to either side here. Here we got an overextension, but as I mentioned earlier, you can simply draw a standard deviation. And you can see how very quickly a -4 yet again, 3 times in a row, it just reversed from that area. So I hope that helps understanding AMRP and the root candles in conjunction with each other. So once you guys see it, it's pretty simple framework. It's kind of hard to unsee, right? At that point, you're just going in day out. So perfect. So this was a pretty brief description of the root candles in the framework. I try to make this as simple as possible because it really is. As we discussed earlier, I'd like to perhaps do a pop quiz, see who listened here, see who took notes. What are the 3 methods of using root candles that I've discussed here in this lecture? There's 2 more, but what are the 3 main ones that I've discussed here? Amazing notes. Look at that. Beautiful notes. Look at that. He wrote some notes for everyone else. You guys can copy and paste those notes right there. Let's see, we have a couple more questions. Can you add those fib projections in the indicator as an option to turn off? That's what I'm thinking of doing. That's a great question. I will have to talk to the 2 team about that, but it would be a great update to have. In terms of when there's more volatile conditions, we can get an automation for that. And let's say price doesn't really extend beyond AMRP, perhaps it doesn't turn on. But when it does, it does. That could be a great addition. For inputs, you mean the settings? Yeah, so I change the settings based off the market conditions. Normally, I like to have it on these settings here. I have the intervals memorized, as you guys know, but if you aren't aware of the intervals, I highly suggest turning them on so we can see how they're being used today. And then I like to have the root candles on, root opening price. I keep this on when I'm looking for soups or continuation trades. And then average model range, I like to have this on as well. But I highly suggest having the intervals on. You can see the pivot times there if you're brand new to this. So great. So any questions here? I'd like to essentially take some time to do a quick Q&A. We've laid out some great, in my opinion, logic to the root candles. It's essentially a logical system. And as I mentioned before, they're not a prediction tool. It's a mechanical way to track structured market behavior, either continuations, reversals, etc. So by studying these predefined timestamps or root candles, you can move away from randomness and go into more of a system where liquidity, time, and price are all interconnected with each other. So to quickly summarize, they essentially track time-based liquidity shifts. They're static markers, so they don't change. It's the same times every day. And we're just aligning with institutional order flow. So we're tracking when price is likely to move and not just where, right? But essentially when and where. DTT weekly. These are the settings I like to use for the weekly. It's pretty much the same. Same exact settings. That's great to hear, Thrax. Very great to hear. I hope everyone else is understanding and utilizing it. It's very easy, and in my opinion, it's just mechanical and systemic in a way to just use it day in, day out. You have a database metric, you have a way to enter, and that's all it is. So I hope everyone took notes. I hope everyone give me a 1 if you guys love this, if you want me to do it again, if you guys understood this. And I laid it out in a pretty simple way, quickly too. So I know we all have busy lives. And I would be uploading this to YouTube as well. So for those of you in the community here, take some time to mark out the root candles on your charts and maybe study what I said here. I try to make this brief on purpose so you guys can quickly just study the points I made here in this lecture. But mark the root candles on your charts and observe how price interacts with them, like I mentioned. And then you'll start to notice how essentially liquidity behaves at these timestamps. It's pretty cool. Once you see it, like I mentioned, you can't unsee it. And by incorporating these root candles into your trading, you're not really just taking trades, you're aligning with the underlying mechanics of the market. So if you have questions before I log off here, drop them in the chat, and I'm happy to walk through some examples or expand on this further. And I'd love to refine it if you guys have questions, and I hope to see you guys trade with a structured precision and root candles. What is the best option for root candle open price or equilibrium? See, now that's great. That's a beautiful question. When we're looking at equilibrium or opening prices, let's actually go to the intraday models. When I'm looking at opening prices, I want to see price either reject from that area or reverse from it. So prime example, 953. If I really zoom in, right there, you can see how we didn't really close above it. There's a wick, there's a manipulation there, but there's no body closure above. And as I've mentioned before, when we're looking for continuation trades, that's where I observe equilibrium. So if you go to the settings, you can see equilibrium here is an option, and it's during continuations. So trend continuations. If I were to zoom in here, what do you guys see here? Before I say anything out loud, this little pop quiz, what do you guys see there as far as what I referenced earlier? Yeah, there's a site here. I think it should be this one here, if I am correct. But yeah, if anyone can answer that, I'm not going to answer it myself. So someone's going to answer it here. I'll give you guys some time. Perfect. Yeah, so it's a close below. It's probably the simplest way to put it. A close below the root. You can see the bodies telling us that it's closing beneath the root here. And I don't really have to look at anything else, right? I can dissect price to a certain degree. You know, there's order blocks, there's fair value gaps, inversions, but truth be told, I can just simply use my root candle because I know it's a powerful liquidity point in time. So once it closes beneath, I'm going to observe equilibrium. If it doesn't really stab into it, as we can see here, then I take that as a rejection point, and I look for price to not really even tap this fair value gap. I'm going to look to see if it can just completely break down, tap the sell side, and perhaps even go lower. Same idea here. During a trend continuation and or reversal, once we close above, I want to see price hold equilibrium of the root candle. By hold, I mean I don't really want to see body close beneath it. So perfect. Well, this has been a brief discussion on root candles and the framework, and I hope it brought more insight into what it can bring to the table. I do like the analogy of what Shemi, excuse me if I mispronounce your name, made, but it's like adding bumpers when you're bowling, except it's trading. Yep, live daily. All right, so I'll leave it at that. God bless. I hope everyone enjoyed this, took notes, and like I mentioned, take some time today. We got plenty of time. Take some time to mark those root candles and see what I discussed here and see how it works, because you'll see exactly what I referenced. You'll see it day in, day out. And once you see it, you can't unsee it. So All right. God bless. Take care now.